नमस्कार। इंस्टीट्यूट ऑफ चार्टर्ड अकाउंटेंट ऑफ इंडिया की हमारी कंटिन्यूअस प्रोफेशनल एजुकेशन कमेटी द्वारा आज के हमारे इस कार्यक्रम जिसमें वेबिनार ऑन इश्यूज रिलेटेड टू टैक्सेशन ऑफ एनपीओज एंड इंपॉर्टेंस ऑफ ऑडिटेड फाइनेंशियल स्टेटमेंट्स इन फॉरेंसिक ऑडिट में मैं भारत देश की छत्तीसगढ़ की राजधानी रायपुर से रायपुर ब्रांच ऑफ आईसीआई के चेयरमैन के रूप में आपका सभी का हार्दिक स्वागत वंदन अभिनंदन करता हूं। हमारे बीच में हमारी इस सीपी कमेटी के वाइस चेयरमैन वाइब्रेंट पर्सन ज्ञानचंद मिश्रा जी हमारे साथ जुड़ गए हैं। ज्ञानचंद मिश्रा सर, आपका बहुत बहुत स्वागत वंदन। हमारे साथ सुरेश वाधवा सर जो आज फैकल्टी के रूप में उपस्थित हैं। सर, आपका भी बहुत बहुत स्वागत वंदन अभिनंदन। हमारे बीच में सेकंड फैकल्टी अहमदाबाद से ज्ञान पिपरा सर भी जुड़ गए हैं। सर, हम आपका भी स्वागत वंदन और अभिनंदन करते हैं। कंटिन्यूअस प्रोफेशनल एजुकेशन कमिटीज, जिसे हम सीपी कमेटी भी कहते हैं, लगातार वेबिनार्स के थ्रू हमारे मेंबर्स जो पूरे देश भर में फैले हुए हैं उनको अलग अलग टॉपिक्स पे एजुकेट कर रही है ताकि मेंबर्स अपडेटेड रहें। और आप देख रहे हैं कि एक समय हुआ करता था जब हम लिमिटेड नॉलेज से अपने काम को कर लिया करते थे, लेकिन आज के समय में लॉज बढ़ गए हैं और कई बार हमारे पास ऐसे क्लाइंट्स आते हैं जो कोई एक पर्टिकुलर लॉ के बारे में पर्टिकुलर एक छोटी सी चीज हमसे पूछते हैं। तो ऐसा नहीं है कि अगर खाली हम इनकम टैक्स के बारे में जानते हैं या हम जीएसटी के बारे में जानते हैं तो हमें बाकी चीजों के बारे में नहीं पूछा जाएगा। सोसाइटी एट अ लार्ज, वो नॉर्थ इंडिया से हो, साउथ इंडिया से हो, सेंट्रल इंडिया से हो या किसी भी भारत देश की जगह से हो, वो मेंबर्स को एक अलग दृष्टिकोण से देखते हैं। सोसाइटी में हमारी वैल्यू डिफरेंट हो जाती है और जब वो हमारे पास आते हैं, हमसे पूछते हैं, तो उनको लगता है, उनसे हमें उम्मीदें होती है कि हमारे मेंबर्स जो है वो उस पर्टिकुलर पॉइंट पे कुछ ना कुछ उनको बता पाएंगे। मैं बहुत बहुत धन्यवाद देता हूं कि भारत देश के एक छोटे से राज्य छत्तीसगढ़ से ही मुझे ज्ञान मिश्रा सर ने ये एक मौका दिया और मुझे उन्होंने कहा कि एक हम प्रोग्राम कर रहे हैं, आप इसको मॉडरेशन करिए। तो बहुत बहुत धन्यवाद करूंगा मैं ज्ञानचंद मिश्रा सर का। और मैं सबसे पहले ज्ञानचंद मिश्रा सर को आमंत्रित करूं उनके उद्बोधन के लिए। उसके पहले मैं बताना चाहूंगा, वैसे तो ज्ञान मिश्रा सर किसी परिचय के मोहताज नहीं है। जिस प्रकार से वो आज इंस्टीट्यूट में काम कर रहे हैं, वो चाहे दिल्ली हो, रायपुर हो या अहमदाबाद हो या नीचे डाउन साउथ चले चेन्नई हो, हर तरफ उन्होंने अपना एक परचम लहराया है और पूरे देश में एक छाप छोड़ी है कि किस तरह से एक मेंबर अगर इंस्टीट्यूट का आता है तो वो कैसे काम करेगा, इंस्टीट्यूट की ब्रांड वैल्यू कैसे बढ़ाएगा, मेंबर्स को कैसे अवेयर कराएगा। ज्ञानचंद मिश्रा सर इज अ सेंट्रल काउंसिल मेंबर and convener of Tender Monitoring Directorate of ICI. He has more than 24 years of professional standing in the credit as an established chartered accountant. Under his vision, CPT committee is taking various initiatives. तो मैं इन शब्दों के साथ ज्ञानचंद मिश्रा सर को उनके उद्बोधन के लिए, स्वागत उद्बोधन के लिए आमंत्रित करता हूं।
So thank you, my younger brother and dynamic chairman of Raipur branch, C. Ravi Balani ji, two respected speakers on of today's program, Jan Pipara ji and of course Suresh Wadhwa ji, and respected participants, good afternoon to all of you. Friends, well said by Ravi bhai, that CP committee is mother of all the committees, providing dissemination of knowledge for the members at large to the remotest part of the country who's you're sitting over there. Friends, we all know that we are organizing webinar on every Wednesday on various topics relevant for the members at large. I am sure that today's program is going to benefit you with respect to the religious trust and of course the documentation which the Pipara sir will be deliberating today. Friends, we all know that the pace of change of the economy is going to make us more vibrant and change with respect to the various laws and acts of the land. Friends, I'm sure that this webinar is going to benefit each one of us, and we will certainly take the best of the webinar. And I'm sure about it that the committee will be hosting more program in coming time. And I have one request to all the participants that if any one of you are interested to be a moderator, to be speaker on any session, please come forward. I request the branches to kindly come with the trainers program, which is exclusive program being launched by CP committee to grow new speakers in the community. So I'm sure that the words, as told by Brother Ravi Walani ji, is going to become a landmark for all of us. That this committee will reach to the last person of the community of the profession, and he will take the benefit of these webinars. By these words, I welcome one and all friends. I am traveling, so I'm not able to interact with you properly. But it's my onus that when it comes to CP committee, at least 2 words to welcome you for the sake that I am present amongst you anytime 24 by 7. And trust me, this is your committee. Enjoy the knowledge dissemination, enjoy the, being leadership, enjoy to become a speaker, enjoy to become a moderator, enjoy to become a good content writer. So Ravi Bhai, I am thankful to you for consenting to be moderator of the session, and I'm thankful to both the learned speaker for sparing their valued time for this webinar. And I'm very sure that the participants who are attending the program shall get the one of the best benefit from this webinar. So thank you, Ravi Bhai. Please proceed ahead.
थैंक यू ज्ञान मिश्रा सर। और निश्चित ही आप अपने व्यस्ततम शेड्यूल से आपने सीपी कमेटी के लिए समय निकाला। हम समझ सकते हैं एक सेंट्रल काउंसिल मेंबर के ऊपर बहुत सारी जवाबदारियां और जिम्मेदारियां होती है। आप समय समय पर पूरे देश के अलग अलग शहरों में ट्रेवल कर रहे हैं। कुछ ही समय पहले आप रायपुर भी आए थे इंसॉल्वेंसी के प्रोग्राम के लिए। मेंबर्स के अंदर आपने उत्साह भी भरा था। मैं समझ सकता हूं, मैं मानता भी हूं कि आपके अंदर वो ऊर्जा है कि जितने भी मेंबर आपको सुनते हैं उन्हें कुछ ना कुछ करने की इच्छा जाग जाती है। तो हम ज्यादा समय नहीं लेंगे। हमारे बीच में हमारे फर्स्ट स्पीकर सुरेश वाधवा सर उपस्थित है। उनके बारे में मैं मेंबर्स को एक छोटा सा उनका ब्रीफ इंट्रोडक्शन दूंगा। सुरेश वाधवा सर इज अ क्वालिफाइड चार्टर्ड अकाउंटेंट and he qualified in the year 2004. Later he earned his bachelor's degree in law from Delhi University. He regularly appears on various benches of the Income Tax Appellate Tribunal across India. He is a visiting faculty with the ICI, Amity University, Noida, and MOU and Rohtak University. He is regularly appearing in various benches of Income Tax Appellate Tribunal across India. तो हमारे बीच में एक लर्नेड फैकल्टी है जिन्हें हम सब सुनना चाहते हैं। और आज का बर्निंग टॉपिक है टैक्सेशन ऑन एनपीओस। किस तरह से हो रहे हैं, पिछले कई वर्षों से हम देख रहे हैं कि जब भी फाइनेंस मिनिस्ट्री बजट पे कुछ आती है तो उनका फेवरेट हॉट टॉपिक होता है ट्रस्ट। उन्हें लगता है कि ये चेंज कर दो, वो चेंज कर दो। आए दिन चेंजेस होते रह रहे हैं। कई बार ऐसा हम अपने शहरों में भी मेंबर्स के बीच में सुनते हैं कि यार अब फिर एक नया टैक्सेशन पे एनपीओ या ट्रस्ट पे अमेंडमेंट आ गया। तो इस तरह के बर्निंग टॉपिक पे सुरेश वाधवा सर लेकर के आए हैं। मैं सीधे आपको हैंड ओवर करता हूं सुरेश वाधवा सर। सर आप अनम्यूट प्लीज अनम्यूट।
Thank you, Raviji. Thank you so much. And let me thank you, Gyanchand Mishra ji. And I welcome each and every member to this webinar. Now, let me directly jump to the topic because I know it will be very difficult for me to say something on this session within a span of 45 minutes. Honestly speaking, I at least need 3 to 4 hours even. 3 to 4 hours even will be very less while we speak about NGOs, trust, societies, institutions, taxation. So I have to rush because I am given the 45 minutes. So let me do best justice with the time allotted. So friends, I will be touching upon these topics. while I have been given a mandate of speaking in English only, but coming from Hindi heartland, it is not possible for us. And so let me try to do justice with the mandate given also. At the same time, at times I will speak from my heart also. So topics, introduction and background. From last 3-4 years regularly, the CBDT in the budget session, if you can find numerous changes, highest changes in any corner of the income tax statute, you will always find it is trust, charitable trust and institutions taxation. In the last, regularly in a consecutive way, there have been made numerous changes in the taxation of NGOs and charitable institutions. So we as professionals must realize that law has tremendously changed. Whether we have changed accordingly or not, that we have to ask ourselves. But filing of income tax return of an NGO or NPO is one of the most serious, is one of the most difficult professional assignment. By and large, we chartered accountant enjoy filing of corporate tax returns of companies on ITR 6, with which I am pretty sure every member of the institute is well versed. But taxation of charitable institutions and trust is not specifically dealt by us exclusively. So now the law has changed. We have to be very careful. We cannot take these returns for granted. So let me guarantee you that the taxation of filing of income tax return of a charitable institution and trust is much more complicated than filing of tax return of a private limited company having a turnover of, let me give you two examples. On my one hand side, there is a private limited company having a turnover of 10 crore rupees. On the other hand, there is a trust having same amount of gross receipts of 10 crore rupees. But now, due to frequent and tremendous changes in the law, the filing of tax return of trust is much more tedious, laborious, comprehensive, and complicated, and we need to excel ourselves with the taxation of charitable trust and institution. So books of accounts have been exhaustively prescribed for NGOs. Audit report on Form 10B and Form 10BB have been exhaustively revised till last year. From last 25 years, we have been filing audit report, tax audit report on Form 10B with a total 16 or 17 clauses. But now, recently, in the month of February, the government has revised its format. Now we have to report on 49 clauses. Compiling and filing of an income tax return on Form ITR 7 is truly very complicated. No one wants to touch into this area. Then we will touch how to maintain your tax exemptions under Section 11, under Section 10, Clause 23, in coordination with whatever changes have been brought into from last 3-4 years. Then most common reasons nowadays we are receiving numerous unwarranted tax demands from CPC Bangalore. So what are the reasons? The reasons are within us only. I will walk you through those reasons. And last, question answers. NPOs, NGOs. So we have trust, societies, Section 8 companies, and other institutions. So all these are collectively referred to as NGOs. Your client can be a charitable trust. Your client can be a society where you will find office bearers, trustees, office bearers, or directors of a Section 8 company, or other institutions which may be set up under some separate statute of local laws or state laws or through the act of parliament sometime. For example, universities, AIMS, Delhi University, Noida Authority, Haryana Urban Development Authorities. So all these are required to file their tax return on ITR 7. And while filing ITR 7, the tax auditor is equally required to issue his audit report on Form 10B or Form 10BB that we will discuss. First regime NGOs and second regime NGOs. I'm sure each one of us are equally aware about first regime NGOs and second regime NGOs, but just to touch upon the topic. Now, all NGOs who are claiming exemption under Section 10, Clause 23C are referred to as first regime NGOs. Second regime NGOs, all those NGOs which are claiming exemption under Section 11 are referred to as second regime NGOs. Mostly we have seen in Section 10, Clause 23C, we observe universities, colleges, educational institutions, hospitals, etc. prefer to obtain approval under Section 10, Clause 23C. So Section 10, Clause 23C comes first on the income tax statute in a chronological manner. So these NGOs who are taking, who are availing exemption under Section 10, Clause 23C, they are referred to as first regime NGOs. And all other NGOs who are claiming exemption under Section 11 are referred to as. Now, the scope of exemption is much more wider when it comes to NGOs claiming exemption under Section 11, because the area of activities, charitable activities, is much more wider when it comes to Section 11. So in the earlier, what used to happen 3 years ago or 4 years ago, there were at least 50 differences between first regime NGOs and second regime NGOs. But now with the changes, with the frequent changes introduced in the last 3-4 years, now all those NGOs have been brought at par. There is no difference as such between first regime NGOs and second regime NGOs. Barring 1 or 2 difference, everything has been made applicable to both regimes. So this is first regime NGOs, second regime NGOs, because this is very basic in taxation of charitable trust and institutions. The roadmap, the road to NGOs and NPOs is not easy at all. Why? Comprehensive books of accounts have been prescribed in Budget 2022. The government in its Budget 22 notified its intention, introduced its intention that now we will formally prescribe some books of accounts. Then in the month of August 2022, wide notification number 1994/2022, books of accounts statutorily required to be maintained for NGOs have been prescribed. So far, since decades, we are used to about section 44AA, about what kind of books of accounts are statutorily required to be maintained by business entities. Till 2022, there were no prescribed list of books of accounts. But last year, through this notification number 94/2022, dated August 10, 2022, the government CBDT prescribed a comprehensive and exhaustive list of books of accounts to be maintained by NGOs. Then, as a second bomb blast, I would rather say, tax audit report on Form 10B has been immensely revised by notification number 7/2023, dated 21st February 2023. So, comprehensive, exhaustive books of accounts. Let's say I am having, for example, I am having 50 NGOs as my clients. So I need to be very careful. I need to be absolutely sure. I need to, classify my NGOs, whether these NGOs can comply with the law. Only then I should be able to file their tax return. The tax returns of NGOs cannot be taken for granted. These cannot be filed as an obligation because the law requires you. In the revised audit report, there are 49 clauses. Earlier, there used to be 16, 17 clauses, but now there are 49 clauses. In Form 10BB, which is made for comparatively smaller NGOs, still there are 32 points. Now imagine, in a tax audit report of a business entity, Form 3CA, 3CD, we are used to compiling and filing and reporting on 44 clauses. But in case of NGOs, we will be required to report on 49 clauses. Just let us appreciate and understand our extended professional risk and professional duty. The tax obligations of NGOs are much more wider as compared to a commercial entity. And I'm going to prove it. Why I'm saying so. So the road to NGOs and NPOs is not easy. The ITR filing of an NGO on Form ITR 7 along with revised tax audit report is much more complicated, is much more exhaustive, is much more comprehensive than ITR 6 of a private limited company with a tax audit report on Form 3CA, 3CD. Now let me prove this and let us understand and appreciate the seriousness of these filings. What is actually happened? How the law looks like as on date for NGOs. Let us appreciate this with the help of this example. We cannot afford the non-filing of an ITR. होता क्या है? Sometime हमारा क्लाइंट हमसे कहता है कि मेरा एक अनाथालय है, मेरा एक गौशाला है, मेरी इसकी तो रिटर्न आप फ्री में भर दीजिए, हम तो बड़ा नेक काम कर रहे हैं, चैरिटी का काम कर रहे हैं. सो हमें समझना होगा कि चैरिटी का काम मेरा क्लाइंट कर रहा है, गौशाला मेरा क्लाइंट चला रहा है, मैं नहीं चला रहा हूं. माय क्लाइंट इज रनिंग, माय क्लाइंट इज अंडरटेकिंग द कॉज ऑफ चैरिटी, इट्स नॉट मी. We must make him understand. Now, the example which now here is the example. Example is, this is an illustration, assessment year 2022-2023. On the left-hand side, there is a ABC Private Limited Company, while on the other hand, there is ABC Public Charitable Trust. In terms of turnover, they both are absolutely same. The gross receipts or turnover of ABC Private Limited Company is 10 crore rupees. minus all expenses of 9 crore rupees, net profit will be 1 crore rupees. On the other hand, in case of ABC Public Charitable Trust, gross receipts are 10 crore rupees. The trust applied its income on various causes of charity to the same extent of 9 crore rupees. Now surplus is 1 crore rupees. Now their defect or their offense is absolutely same. What they did, they both did not file their tax return for the assessment year 2022-2023. The due date for filing of income tax return for the assessment year, the last due date, the extended due date for the assessment year 2022-2023 was, considering all belated return provision, the income tax return of ABC Private Limited was required to be filed latest by 31st December. And same is case with ABC Public Charitable Trust also. Now, both these entities missed to file their income tax return. Now, let us compare the aftermath, the consequences of non-filing of this return. ABC Private Limited Company, today, this private limited company is still having an option to file its income tax return through an updated return under the provisions of Section 139, subsection 8A. So on a net profit of 1 crore rupees under updated tax return, the ABC Private Limited Company can still buy peace of mind by paying 39 lakh rupees approximate as taxes. But it is a nightmare for the ABC Public Charitable Trust. The option of updated return under Section 139, subsection 8A is not available to NGOs and NPOs. Now, if a notice is received today, what the tax officer will do? In case of NGOs, if a tax return is not filed within the due date or within the belated time period allowed, the exemption under Section 1112 cannot be given. That is the piece of law. No tax officer can help us. Now, what tax officer will simply do? He will demand 30% of income tax on the gross receipts of 10 crore rupees, plus interest or late filing, etc. Now the question arises, in case of an NGO, which is all the time running its philanthropic purposes, it received 10 crore rupees. It distributed 9 crore rupees on help to poor and needy, buying medicine for the marginal people, educating the underprivileged. It has already spent 9 crore rupees. But the income tax department is demanding 3 crore rupees as taxes. Now the question arises, now where from this 3 crore rupees as taxes will come? So that is the cruel and harsh law with respect to NGOs and NPOs. So we need to discipline ourselves. We need to be very upfront before our client that either we do not have time for filing these tax returns of NGOs, or we do not have sufficient expertise, or we cannot file these tax returns for free because this is an NGO. We have to be absolutely clear. Otherwise, once Section 143(1) intimation is received in case of NGOs and NPOs, there is every other day new bomb blast in terms of unwarranted and enormous tax demand. So I hope this example will set the pitch how important is the filing of income tax return for an NGO, for a trust, society, charitable institution, We have to be absolutely serious. We must realize this fact first of all. Now, interestingly, in this year, we have to be mindful of 3-4 facts. Number one, all audit reports, all tax audit reports on Form 10B will be filed on the revised format. The revised format is so exhaustive and so comprehensive that it requires tremendous research and homework on our part. Number two, for the purpose of filing of Form 9A and Form 10, the government has already advanced the due date by 2 months. So in case I am having 50 NGOs as my clients, for example, so I have to prepare their balance sheet. I cannot wait for them till September. मुझे 31 अगस्त तक तो इन NGOs को फॉर्म नंबर 9A, फॉर्म 10 फाइल करने ऑनलाइन. Before that, the balance sheet should be finalized. The balance sheet, the audited financial statement must be signed before August 31st, 2023. तो मुझे अपने पास जो मेरे पास क्लाइंट्स हैं एज एनजीओज, उनकी तैयारी मुझे जून जुलाई से शुरू करनी पड़ेगी. उनकी बैलेंस शीट्स कब साइन होंगी? 31 अगस्त सबसे पहली तारीख है जब मुझे इनका फॉर्म 9A या फॉर्म 10 भरना है. फॉर्म 9A, फॉर्म 10 आप तब तक नहीं भर सकते इन ए फेयर मैनर जब तक आपके सामने ऑडिटेड फाइनेंशियल स्टेटमेंट्स ना हो. So just imagine, in case you are having sufficient number of clients as NGOs, हम उसकी बैलेंस शीट 15 सितंबर तक नहीं बना सकते, 25 सितंबर तक नहीं बना सकते. अब तो आपको इसकी तैयारी 2 महीने एडवांस करनी होगी. Now the question arises कि इतने सारे चेंजेस के साथ, with so many changes introduced in the last 3-4 years, how one can maintain its tax exemption. So there are 4 pillars on which these tax exemptions will sustain. If we are ready to comply, if we are ready to take care of all these 4 pillars, our tax exemption will be maintained. Otherwise, the day is not far away that the tax exemption presently available to an NGO may be withdrawn for a particular assessment year, for a particular claim, or sometime even, for example, the provisional registration, the final registration. Now there is a regular registration. To maintain your tax exemption for a particular assessment year, there are 4 corners, there are 4 pillars. Number one, the income tax return of your NGO client must be filed on time. If you will not file on time, even the time period allowed under the belated return for the financial year ended March 31st, 2023, if an NGO misses to file its tax return latest by December 31st, 2023, your exemption is gone. You cannot be, the law is absolutely clear. No one can help you. So the exemption, in order to maintain exemption for the assessment year 2023-24, we must make sure that income tax return of my client is filed well on time. Number 2, filing of income tax return itself is not enough. The tax auditor must also upload, must also file his tax audit report through his AR-based profile well on time, which is 30th September, 1 month prior to the due date of filing of income tax return. So all these 4 must be ticked yes. The tax audit report on Form revised Form 10B or 10BB must be compiled, must be filed. This is the most important reason why there are enormous demands. What is happening? CPC Bangalore, let's say in case of an NGO, the income tax return was filed well on time, but the tax auditor missed to upload its tax audit report, or he filed the tax audit report with a delay. So CPC Bangalore, artificial intelligence systems are used there. The tax returns are processed with least human intervention. The system will reject. There is a ITR 7 which has been processed. Now the corresponding Form 10B or Form 10BB has not been filed or has been filed beyond the due date. What CPC Bangalore will do? It will simply reject many of your tax exemptions and will raise the tax demand. Similarly, with the filing of ITR 7 on time, filing of tax audit report on time, we need to make sure that a form or statement on form number 9A or form number 10 is also filed on time. That is latest by 31st August 2023 as per the latest budget provisions. मुझे अपने टैक्स ऑफिसर को इंटीमेट करना होगा. आई नीड टू इंटीमेट माय टैक्स ऑफिसर्स कि मैं इस साल क्या स्पेसिफिक एक्यूमुलेशन करने जा रहा हूं, या ऐसी कौन सी इनकम है जो मुझे मिली नहीं है, या मैं जो इनकम मुझे मिल गई है मैं उसे खर्च नहीं कर पाया. फॉर्म 9A is required to be filed latest by 31st August. So as NGOs, step number 1, latest by 31st August, file all Form 9A, Form 10. Latest by 30th September, let's file our tax audit report on Form 10B or Form 10BB. Latest by 31st October 2023, let us file all our ITR 7. तो जाके हमारी टैक्स एग्जम्पशन बचने वाली है. And above all, in last 3 years, the government changed the pattern of allowing registrations. Earlier, prior to 1st April 2021, the registrations were perpetual in nature, and there was no concept of provisional registration or provisional approval. Now, from 1st April 2021, the law changed with respect to NGOs relating to grant of provisional registrations and final registrations. In India, we have close to 3 lakh NGOs which are filing their income tax return on Form ITR 7. Means either they have 12 AB registration or Section 10 Clause 23 registrations in their hand. Now the government itself claims बजट 2023 के डॉक्यूमेंट्स में गवर्नमेंट ने खुद डिक्लेयर किया है कि जब आप प्रोविजनल रजिस्ट्रेशन फाइल करते हैं, इट इज द प्रोसेस इज एब्सोल्युटली ऑटोमेटिक. हम उठा के आपकी एप्लीकेशन को खोल के भी नहीं देखते हैं. आप जो फाइल करते हैं, ब्लैंक अटैचमेंट फाइल कर रहे हैं, क्या लिख रहे हैं नहीं देखते. यू कैन रेफर टू एक्सप्लेनेटरी मेमोरेंडम wherein the government has acknowledged that while granting provisional registration, the registrations are automatic. We do not check anything. Now, one point which has been missed by 90% of NGOs in India, due to which all provisional registrations are going to be rejected very soon. If the income tax department, if the 14 commissioners of income tax exemption spread all across India take one stand. हुआ क्या है साहब, प्रोविजनल रजिस्ट्रेशन लेने के हर आदमी ये सोच के बैठा है कि प्रोविजनल रजिस्ट्रेशन की वैलिडिटी तो 3 साल की है, जबकि ऐसा बिल्कुल भी नहीं है। प्रोविजनल रजिस्ट्रेशन मिलने के बाद अगर आप चैरिटेबल एक्टिविटीज शुरू कर चुके हैं तो हमें विदिन 6 मंथ्स डिपार्टमेंट को अप्रोच करना था फॉर द ग्रांट ऑफ फाइनल रजिस्ट्रेशंस ऑन फॉर्म 10AB। After receiving provisional registrations, we were required to approach to the department once again, to the local commissioner of income tax exemption for the grant of final registration. In case after obtaining provisional registration, we have started our charitable activities. None of the NGOs, most of the NGOs have missed this provision. Now the income tax department is rejecting majority of the final registration applications. I am facing this heat every other day. So in case we have to maintain our tax exemption in 4 points, so we must not give any chance to the department. There should not be any specified violations, and compliance with the other law is one of the most important pillar of granting or maintaining your 12AB registration. So with this, I'm sure I will be able to ignite some current in my colleagues that how serious these compliances are, and we need to be very careful while dealing with our NGO clients. Most common reasons, the major part of today's deliberation was, what are the most common reasons for these unwarranted and enormous tax demands to NGOs and NPOs from CPC Bengaluru? Let's say in case I'm having 10 NGO clients, I can promise you, I can guarantee you, if you have 10 NGO clients, in 6 of them, you will find a tax demand notice from the CPC Bangalore. Sometimes demand can be reasonable or moderate, and sometimes it can be so enormous that one can get shocked how such an enormous demand can even be arrived at. So what are the reasons? If we can, plan, if we can note down all these reasons, I'm sure this year, while we will file income tax returns for NGOs and NPOs for the assessment year 2023-2024, our successful processing ratio will increase tremendously. How? What are the reasons? Reason number 1, an NGO has filed its tax return on ITR 7, but the tax auditor has missed to file his tax audit report on Form 10B. Either he completely missed out, or he filed his tax audit report beyond the date permitted in the law, which is 30th September, which was 30th September 2022. So non-filing of tax audit report by the tax auditor throws the NGO on the sword of unwarranted and enormous tax demands. So either we must say no to our clients, that I do not deal into NGOs and NPOs, I do not have sufficient bandwidth, I do not I know very well. See, it is not okay. Let's say I am having 50 clients. I am having 50 private limited companies. So when it comes to filing tax audit report of private limited companies, I am very used to, I am very expert when it comes to filing of tax audit report in case of NGOs on form 3CB, 3CA, 3CD, 3CB, 3CD, etc. And I'm used to with all these form 3CA, 3CD since decades now. So I am having 50 clients, all are commercial clients. Now I am having only 2 clients who are just NGOs. Believe you me, I will not be able to do justice with these 2 clients. Either I must develop a next level of research and homework on Form 10B, Form 10BB, or otherwise, the client is bound to have enormous tax demands. So for 2 clients, NGO clients, I am filing their tax returns as an obligation. Can I spend man hours in research and doing research or uh, getting a grip over Form 10B or Form 10BB? If the answer is yes, then yes, we must do it. If the answer is no, we must not handle these tax audits on Form 10 because 10B is such an exhaustive, is such an comprehensive, it's much more comprehensive than even than the tax audit of commercial companies. So filing of tax audit report on time, filing of tax audit report properly will lead on the path of corrections. Number 1. Number 2, ITR has been filed on a wrong ITR form. Now, as an NGO, if I am an expert, then it is absolutely okay. Sometimes what happens, there is no clarity in the mind of the tax council, in the mind of the chartered accountant, in the minds of members of our institute, actually, which form will be filed for the income tax return of an NGO. An NGO is having 12 AB or section 10 clause 23 registration in its hand, then income tax return will be filed on form ITR 7. The answer is absolutely simple. If you are having any kind of approval from the income tax department, then the ITR will be on ITR 7. In case an NGO is not having any kind of approval or registration from the income tax department, the ITR will be filed on form ITR 5. Now, sometime due to known research or due to known handling of NGO clients, the income tax return of an NGO is filed on the wrong form. Once it is filed on the wrong form, the department will not give us any exemption claim, and it will lead to enormous and unwarranted tax demand, which will be, we have no option. Now, I am not having any magic stick in my hand to advise you as to how to address these demands. Most of the time, filing of rectifications under section 154, or in the majority of the cases, filing of an appeal before Commissioner of Income Tax Appeal is the only way to handle these unwarranted and enormous tax demands. Next point. Incorrect registration numbers have been punched in the ITR 7. Now, you must have seen, if you have provisional 12 AB registration and provisional 80G registration, in these both 16-digit registration, there is only a 1-digit difference. So in my office also, it has happened that in ITR 7, the 12 AB reference number 16-digit code was required to be punched properly, but out of clerical error, provisional registration number of ATG, which is again 16-digit, with only a digit of difference, has been punched. Now, these tax returns are processed with least of the human intervention. When the return is processed by the system matches that this NGO is saying it is having 12 AB registration. But the reference number is not matching or mapping with the database of the department. So the system will not give you the exemption claim under section 11 or section 10 clause 23C, and it will again lead to unwarranted and enormous tax demand. Most common reason number 4, form number 9A or form number 10 has not been filed. Sometimes we have observed that the tax council or tax auditor is not clear which form is to be filed. I have personally seen in many cases which we are representing that form 10 was required to be filed, whereas form 9A has been filed mistakenly. There is a difference between form 9A and form 10. Form 10 is form 10 is a statement which is filed in case of specific accumulation, whereas form 9A is filed for some other situation. So in case ITR on form ITR 7 has been filed properly, tax audit report has also been filed properly, but form number 9A has been missed out, or form 10 has been missed out, or instead of form 10, form 9 has been filed. So to the extent of accumulations claimed, the department, the system of the department will not give you the benefit of accumulation, and it will raise to partial withdrawal of tax exemption to the extent of facts mentioned in your application. Next, details punched in tax audit report on form 10B are mismatching with the details punched in form ITR 7. This is absolutely, this you must be observing nowadays in ITR 6 vis-a-vis form 3CA, 3CD. So nowadays, 10 years back or 15 years back, what used to happen, as a professional, our duty used to end once we compile and file in a physical manner the income tax return of our client. But now our duty has been extended till the time we receive successful processing of income tax return from the CPC Bangalore. So my duty, my reporting has been enlarged. If reporting on point A has been mentioned in ITR 7 at figure X, and the same is not matching with the tax audit report in form 10B, it leads to dispute, it leads to disallowance of some deduction or exemption claimed. So the moral of the story is income tax return on form ITR 7 or any other ITR even, it's not just ITR 7. Any income tax return nowadays must be complied, must be compiled in a meticulous manner so that we receive least possible or zero number of mismatches, proposed adjustments notices from the CPC Bangalore. For this purpose, we need to be absolutely sure which returns are required to be taken up. We need to take a call on the professional charges in respect of tax returns to be compiled. We cannot take any tax return for granted or for an obligation. Otherwise, I may not be able to give that amount of quality and attention in the tax return. And it will just lead to unwarranted tax demand only and nothing else. Thank you so much. Thank you. That was my deliberation. And I hope कि 2 मिनट पड़े हैं हमारे पास क्वेश्चन आंसर के लिए. Over to you, Ravi ji.
Am I audible?
Yes.
Yeah. Thank you for your deliberation, sir. बहुत सारी क्वेरीज आई हैं जिसमें से कुछ लिमिटेड क्वेरीज मैं ले लेता हूं. एक क्वेरी है सर, when form 10/10B needs to be filled, what's the time limit?
30 सितंबर 2023 for the assessment year 2023-2024. ये जो 31 मार्च 2023 को असेसमेंट फाइनेंशियल खत्म हुआ है, इसकी टैक्स ऑडिट रिपोर्ट ऑन फॉर्म 10B भरी जाएगी 30 सितंबर 2023 तक.
ओके. एक नेक्स्ट क्वेरी है सर, if the registration of trust is cancelled due to non-reply of query, whether the trust is eligible for reply for registration, the portal is not aligned to register.
Here is the good news. Number one, the government of is very conscious of the fact कि बहुत सारे registrations cancel हो गए हैं. तो we have only two options. Either you should apply immediately to the, you should approach to the income tax tribunal against the decision taken by the Commissioner of Income Tax Exemption that your 12AB has been rejected on technical reasons or for whatever reasons, so that ITAT can hear the matter and remand back the case to the Commissioner of Income Tax Exemption. Or it is going to happen within next 2-3 days that as of now, you may not be able to see Form 10AB. You can reapply. But let's wait for just this week. The government is going to allow this facility that Form 10AB, you will be able to reapply very soon.
Okay, एक लास्ट क्वेरी ले लेता हूं सर मैं. One of my client is provisionally registered under section 12AB on September 2021 and commenced the activities thereafter. However, we filed the application in Form 10AB for granting the permanent certificate on December 22. Tax officer rejected our application with the reason that the application was made beyond 6 months from the date of commencement of activities. What is the remedy for it? Just because of delay in time, can they reject our application? What if they reject?
They can very well reject. Most of the commissioners, most of the India में total 14 commissioner of income tax exemptions हैं. There was a circular also which was allowing the delay, but delay up to 30th September 2022. अब जिस साहब का 12AB रिजेक्ट हो गया है, देखिए एओ का एक्शन एकदम सही है. The action of the AO, the action of the Commissioner of Income Tax Exemption is fully justified. Commissioner of Income Tax Exemptions का ये मानना है that they do not have any specific power to condone this delay. Now you have two options. Either you should approach to the Income Tax Appellate Tribunal, or let's wait for this week, as I mentioned earlier, and you can reapply on Form 10AB. You have to take a call whether for the assessment year 2023-24, your tax exemption, if it is so high, you should immediately approach to the Income Tax Tribunal. Or if you are into losses, there is a deficit, if the Commissioner of Income Tax Exemption has rejected my 12AB, it is not going to pinch me in any way, except that for a very limited period, no one will grant me donations. So you have to take a call either to approach to the ITT, or you should wait for next 1 week and reapply 10 on 10 AB these registrations once again.
थैंक यू वेरी मच सुरेश माधवा सर। आपने शुरू में ही कहा था कि 45 मिनट्स तो बहुत कम है इतने बड़े टॉपिक के लिए, उसके बाद भी आपने जस्टिफाई किया बहुत अच्छे से। मुझे पूरी उम्मीद है कि देश भर से जितने भी पार्टिसिपेंट्स हमारे साथ जुड़े उन सबको इनका बेनिफिट मिला होगा। और हमारे साथ हमारे सेकंड मॉडरेटर चेतन जगेतिया जी भी ज्वाइन कर लिए हैं, और ज्ञान पिपारा सर इंतजार कर रहे हैं अपने ज्ञान की वर्षा करने के लिए। तो मैं माइक हैंडओवर करूंगा चेतन जी को कि आगे आप प्रोग्राम को कंटिन्यू करें। थैंक यू वेरी मच सर।
Thank you. Thank you.
Thank you.
Thank
you very much, Ravi ji. Thank you very much, Suresh sir. Am I audible, Ravi ji?
Yes, yes.
यस आप ऑडिबल है सर।
Yes. Okay. So, welcome everyone to this session on importance of audited financial statements in forensic audit, our second session for today. In today's discussion, we will explore the role of audited financial statements and why they are crucial in conducting effective forensic audits. First of all, before starting the session, I am thankful to the CP committee of ICI for organizing this amazing seminar. I am thankful to CA Purushottam Khandelwal sir, Chairman CP committee, and CA Gyan Chandra Mishra sir, Vice Chairman of committee, for giving me this platform to moderate the session in front of the learned faculty, CA Gyan Chandra Pipara sir. So coming to the topic, as we all know, one of the key sources of information in forensic audit is the audited financial statements. Right from knowing the credibility and reliability, verification of accuracy, detecting fraudulent activities, audit trail and documentation, all these important aspects will be covered in today's session. So everyone, before we delve further into our discussion on the importance of audited financial statements in forensic audit, allow me to introduce our esteemed speaker for today, CA Gyan Chandra Pipara sir. As a senior chartered accountant, he has an experience of more than 40 years in the field of tax consultancy, management consultancy, providing training to the banking officers on the analysis of financial statements, business models, etc. Associated for international companies dealing in analytics, credit skills, etc. He regularly provides training to Class 4 and Class 5 officers of State Bank of India at State Bank Academy, Gurgaon, and State Bank Staff College, Hyderabad, on intensive analysis of the financial statements. He has recently been awarded by the ICI as the second best international research paper on T3 structure test, trace and track of forensic audit in the category of auditing. Sir, I hope and I know everyone who is attending this seminar would be eager to listen from you. Our topic, importance of audited financial statements in forensic audit. Sir, as a moderator of the session, we will be having a chat session where I would be asking you the questions on the topic. So, sir, shall we start with the question answer?
Yes, go ahead.
So, sir, starting with the first question, I would like to know, how can the members effectively utilize financial statements for the purpose of conducting forensic audit? Like the basic introduction.
Okay. And before I come to Chetanji, your issue, let me first thank Purushottam Khandelwal and CA Gyan Mishra ji, who are the chairman and vice chairman of the CP committee. And it was the Purushottam Khandelwal, we both being from Ahmedabad. He knew that me and my firm, we conduct large number of forensic audit, and I regularly provide trainings on analysis and understanding of the financial statement. So therefore, he thought that in the present age, when every chartered accountant is aspiring to do the forensic audit, because the forensic audit is one of the friends, very emerging field, as we see that there are large number of queries, large number of assignment, large number of offers are being floated every day to conduct the forensic audit. So I immediately agreed, because this is one of the subject which is very close to my heart, because it is part and parcel of analysis of the financial statement. And therefore, I'm thankful to Purushottam Khandelwal, Jan Misra ji, and the CP committee, and Chetan Jagadia for being moderator and being nice, who has spoken good word about me. Thank you. Chetan ji, as you said that what is the relevance of the financial statement when we talk that to audited financial statement in the forensic audit. Let me deal with this point in two parts. Before that, am I audible clearly? Okay. In two parts, in the sense, friends, as we know that the purpose of forensic audit is threefold. One, to find out diversion of funds. Second, to find out siphoning of the funds. And third, is there any misstatement of information in the financial statement? Because any diversion of the funds and siphoning of the funds is the prime object of a forensic audit. I'm talking the forensic audit if it is conducted on behalf of regulator, be it bankers, be it with various regulating authorities, if they are investigating into the financial affairs of the company, they will always look into what is the fund, how much fund, by which way it has been diverted, by which way it has been siphoned, whether the transaction is in the normal course of the business or it is an attempt to divert the funds or siphoning the funds. That is one part. Second part, as RBI circular also says that any fraud in reporting of the financial transaction after the new Companies Act 2013, wherein we have section 447 and 448, wherein the word fraud has been defined for the first time in the Companies Act, and in the section 448, the word financial statement has been replaced with the earlier word of balance sheet. Meaning thereby, if there is a misstatement of information, not only in balance sheet, but in the cash flow statement, in the significant accounting policies, in the notes on accounts, or even in the statement of profit and loss statement, it all covers within the definition of the misstatement. So therefore, as you know that all the banks, particularly when they look for the credit, when they analyze the credit proposal of a company or any entity, they always rely upon the financial statement, one which are audited. Because the whole purpose is that there is proper compliance to accounting standards, there is proper compliance to the gaps, there is proper compliance to the various mandatory accounting standard prescribed in India or as applicable to the company, and therefore whether the financial statement are true and fair. So when we talk of true and fair, meaning thereby whether the sales has been shown correctly, investment has been shown correctly, so and so forth. So coming to the issue that financial statement is always a starting point for conducting the forensic audit. Because by looking at the financial statement, a forensic auditor will come to know about the amount of investment made into subsidiary, about the level of inventory, about the level of fixed assets, about the level of intangibles, about the sales, about the related party transactions, about the purchases. And based on all these various disclosure made in the financial statement, he will do certain calculation, certain ratio, apply certain test, apply certain tools, so as to find out is there any material discrepancies between the cost of raw material consumed in this year, which earlier year, so and so forth, that the various tools are applied. So as I said that the financial statement are not only important, but it forms a basic document to start with a forensic audit. As number one, it provides an overview of the business. It provides about the quality of corporate governance. It provides about the various fields which a forensic auditor will be looking by looking at the financial statement. So yes, I will put it this way, that the financial statement, one which are audited, is a very important tool, very important evidence to start with forensic audit. Of course, when one is looking into, let's say, certain investment has been shown in the balance sheet and one is examining whether these investments are genuine or has been used for the purpose of diverting the resources, etc., etc., then he has to look into which company investment is made, what is the object, what is the purpose, in which territory the company has been set up, what is the source of the funds, whether it is borrow fund or own fund. All those various tools and methods needs to be applied in order to reach to a conclusion, whether there is a diversion or siphoning, and so and so. So the financial statement, one, is the basis source of information to start with, not the entire, not the end, not the 100%. And second, one of the object of forensic audit, that is misstatement of information, can only be found out from the study and analysis of the financial statement. So as I said, out of the three objects, all the three objects of diversion of funds, siphoning of the firm, and misstatement of information, one will need to look into the audited financial statement.
Yes, sir. As correctly mentioned, that financial statements are the basics before starting the forensic audit. So to be a good forensic auditor, I would say, to sum up this question, that you need to be a good reader of balance sheet. You need to be a good reader
So
of
not only the reader, you should have a thorough knowledge of accounting standards, generally accepted accounting principles, and to read in between the line.
read
In between the line, meaning thereby, I will put it this way: if a company has made certain investment into plant and machinery, as a part of our routine audit, the auditor will be looking into all the documentary evidences which will justify that the company has purchased plant and machinery. There is a delivery of goods, there is an entry in the fixed asset register, there is a payment, transaction is also at arm's length, and the purchase is also not from the related party. But forensic audit will read in between the line. He will look at the production made by the company, what is the installed capacity, what is the production capacity, and whether, if existing production capacity is not fully utilized, then the forensic auditor will doubt the genuineness of investment into plant and machinery. And particularly if the company is already into stress, then this doubt goes further strong, that when the company was having liquidity crunch. So there are various methods how to find out liquidity crunch, etc., etc.
Yes.
So yes, financial statement. So auditor has to have an ability to read the in between the line also,
as well as analyze.
for the purpose of while analyzing. Yes.
Coming to the next question, sir, we would like to know what are the major areas or significant disclosures within the balance sheet and the income statement, that is profit and loss statement, that members can utilize by conducting an forensic audit.
Okay. So give me 15 minutes time, Chetanji. Let me touch upon all the relevant points which a member will be looking into the financial statement while doing the forensic audit. To start with, let me first start with assets, because that are the various resources which the company is showing. So to start with balance sheet, and in balance sheet, let's start with the assets. So the first item in the balance sheet is property, plant and equipment, or we call it fixed assets also. So let's do a member, one of our chartered accountant friend is doing forensic audit, and let's say it is a manufacturing unit. So one of the step in doing the manufacturing unit forensic audit is to always look into what are the various fixed assets in which company has made investment. So these investment may inter alia include land, building, plant and machinery, furniture, fixtures, equipment, vehicles, etc., etc. Going further, the forensic auditor will require to keep in mind the nature and size of the business, vis-a-vis nature and size of investment made into the various fixed assets. To take it further, let's say it's a steel manufacturing company and the total sales of the steel manufacturing company is, let me put it, 100 crore, and company has made investment into plant and machinery of rupees, let's say 500 crore. So the first point which will give doubt in this case, that by investment of 500 crore, that too in the plant and machinery, why the sales is just 100 crore? Because as you know that the plant and machinery is required to be depreciated over its estimated useful life, and therefore the amount of investment, the nature of industry, the amount of volume of sales, etc., are very, very relevant and a starting point for the purpose of investigation. Let me take another example. Let's say it is a steel trading company. Naturally, when the business is doing the trading, so probably there may not be any investment into plant and machinery, because the trading what require at the most go down, factory shed, furniture, fixtures, equipment, etc. But still, if the company is showing certain investment into plant and machinery, and while looking at the revenue from operation, there are no manufacturing operation, it gives a doubt from forensic audit point of view to be examined whether this investment shown by the company is genuine or only on paper, or this investment being only on paper has been used by the promoters or management as a tool to divert or the resources or siphoning of the funds. Let me take another example. So when we look at first point I said is, before I come to intangible example, so always we look into in the forensic audit, what are the various amount, what are the various fixed assets owned by the company and how much is the investment made. To take it further, in forensic audit, we also, every forensic auditor look into what is the present utilization capacity of the production facility which the company has made, if it is a manufacturing unit. So let's say it's a pharma manufacturing unit, and every pharma company, or for that matter, every manufacturing company, they have certain existing production capacity. Be it pharma company, be it textile company, be it steel manufacturing or glass manufacturing, every company has its capacity based on the amount of investment made into plant and machinery particularly. So let's say that company's existing capacity utilization is about 60 to 70% since last couple of years, and still during this year or in earlier 2 to 3 years, company has made certain substantial amount of investment into plant and machinery. So naturally, forensic auditor will examine that what was the need and purpose and logic of having made investment into plant and machinery so as to increase the capacity, because every addition, major addition to plant and machinery will, friends, ultimately lead to increase in manufacturing capacity. So if my existing capacity is not fully utilized, still management going ahead and putting extra money into plant and machinery, which is subject to wear and tear. And if the plant and machinery are not able to be used in the manufacturing process, so the whole process of investigation are being started with respect to who has supplied the plant and machinery. Is there comparable quotation available? Whether the plant and machinery is genuinely purchased, and if it is genuinely purchased, then whether the transaction is at arm's length, etc., etc. So all those aspects needs to be examined. Going further, that's not the end. We also look into, every forensic auditor also look into the profitability. Having put the plant and machinery or a manufacturing facility, naturally every company will be having production, and every production will have certain raw material cost of material consumed, and considering the cost of material consumed, opening stock and closing stock, every forensic auditor will work out what is the operating margin. Even if the sales is 500 crore and the investment into plant and machinery is 100 crore, and but operating margin is just 4 and 5%, then probably no prudent businessman will invest further amount into the plant and machinery, knowing that operating margin is just 3 or 4% or 5%. Probably he will try for the job work or other facilities, but not putting the investment into plant and machinery. In such cases, we have find in large number of cases where, in spite of not fully utilizing the existing capacity and still company going for capex, incurring huge investment into the fixed assets, particularly into plant and machinery, and then if the financial position is examined, it is found that even the financial position of the company is not good. Not good in the sense, there may be default in borrowing. There may be default in payment of provident fund, PF, ESIC. There may be default in payment of GST, which is collected from the government. There may be default in payment of TDS, which has been deducted by the company from payment to salary, labors, or various charges. So on the one hand, my capacity of the company is not fully utilized. On the other hand, company is having financial difficulty, and on the side by side, company investing into plant and machinery. In all such cases, it has been found that such investment was nothing but an attempt to divert the resources of the company. So this is one way of plant and machinery. Going further, friends, nowadays you also will find huge investment into intangibles like patent, design, trademark, copyright, etc. So keeping again, that also is a very, very valuable piece of evidence for the purpose of forensic audit. And moment there is a substantial amount of patent, design, trademark, copyright, etc., same is also examined, keeping in view the nature of industry, volume of industry, and whether such investment in intangibles is reasonable and logical or not logical. To put it this way, let's say you are doing the forensic audit of a textile trading company. So naturally, if the business is a textile and that too in trading, probably there may not be any expenditures on designs and drawings. But still, in such company, if members find there is an investment in designs and drawings, so naturally, the immediate step should be to find out what is the nature of designs and drawing, why there is a designs and drawing, is there any genuine designs and drawings, or only it is paper and which is an attempt to divert the resources, etc. So for every intangibles, like if it is a mining company, naturally in the case of mining company, there will be mining license and the company will be required to pay certain mining fee to the government, whatever the state government, the mining which has been taken on lease. So by looking at such relevant expenditure in intangible, which nature of industry, or looking at intangible, which nature of industry, both issues are to be examined to find out whether the expenditure is genuine, which has been shown as intangible, or the activity is genuine because activity requires certain intangible, whereas there may not be such intangibles shown by the company in the balance sheet. Moving further, Chetanji, another important aspect we look in, or every forensic auditor look into the balance sheet is the investment made in capital work in progress. My experience says that 6 or 7 out of 10 cases, capital work in progress shown by the company is found to be only on paper or inflated or misstatement of information. In few cases, we have found that the company were running into losses and all the revenue expenditure, be it raw material, power and fuel, labor, wages, traveling, conveyance, etc., has been capitalized by the company. So as the company has been able to show the profit, and since it is capital work in progress, company is also not required to provide depreciation. In few cases, we have seen the company showing capital work in progress, and in turn, the payment has been made to related party, and for 2 years, 3 years, the assets were not capitalized, and after 2 to 3 years or 4 years, auditors writing in the notes on accounts that the capital work in progress includes certain amounts which are slow moving or obsolete, and then after 1 or 2 years, then amount is being written off. So we have made the physical verification also in few cases wherever the company has been showing the substantial amount as capital work in progress. And my conclusion is that at least in 50 to 60% cases, either the capital work in progress is found to be inflated or not at all existing, or it was nothing but funds which had been diverted in the guise of loans and advances for plant, machinery, equipment, building, etc. And then if the capital work in progress is not capitalized within a period or so, it is always found to be a gray area for the purpose of forensic audit. So the starting point for capital work in progress is number one, if there is a substantial amount shown by the company as capital work in progress for a couple of years, meaning thereby for last 4 to 5 years, substantial amount has been shown. Number two, what is the nature of industry? And number three, why the amount has not been capitalized. If the three issues are examined critically, interlinking finding of one issue with another, probably one will come to know, and then whole lots of investigation with respect to which party, etc., etc., etc. Moving further in the asset sides of the balance sheet, Chetanji, next very important point is with respect to investment made into subsidiary, associates, and joint venture. As large corporate, they take huge borrowings from the banks, financial institutions, or be by way of IPO or deposits. Naturally, as the business expands and the subsidiaries are being set up in the various territories or countries outside India. So moment if it is a subsidiary which has been set up by the company in the tax-free haven, particularly in British Virgin Island, Bahamas, Panama, Mauritius, various countries. So that's the starting point for a forensic auditor to be examined. Number one, why at the outset a company has been set up in the tax-free haven. Number one. Number two, for what purpose and object this subsidiary has been set up. And number three, moment the purpose and object is not akin to the main object of the company, then it's an early warning sign. And moving further, how much is the amount of investment, whether the investment is in the form of equity shares or it is in the preference shares, or what is the coupon rate, etc., who are managing the affairs of the company. So the investment made into the various associates, subsidiary, joint venture is one of the very, very important point in the case of forensic audit. So geographies, object, purpose, management, source of the funds, which fund has been used for the purpose of giving loan, because moment it becomes subsidiary, naturally the entire amount may not be by way of investment, but some amount may be by way of investment and the major amount may be by way of loan, or it may be reverse case also. There is no fixed pattern we have found. But be it loan, be it amount of investment made into subsidiary, the source of the fund, how the profit will be generated by the subsidiary, and how the amounts will be brought in back needs to be examined over the period of business cycle of the subsidiaries. In the various forensic audit, we have found by and large, this is one of the method used by the corporate Inc. in India as the root or source for siphoning of the funds. And we have also seen when the business position of the company is good, company keep on investing into the various subsidiaries in the different geographies. And when there is a financial turmoil in the company, they start providing diminution in the value of investment. And as a result, initially some percentage and then increasing percentage of diminution, and finally 100% amount is provided. And then after few years, investment is gone away from the company's balance sheet and the company does not have a track on such investment. I have a classic case in one of the India's leading renewable company. The company has borrowed fund of 10,000 crores from the Indian banks. Try to understand, friends, that 10,000 crore is not a small amount. And this company has set up subsidiary in 87 countries. So probably every major country, there was a subsidiary. After having made investment into subsidiaries, the company's financial position start deteriorating, account turned into NPA. Then there is a reorganization, restructuring of the loan. The company approaches the bank, then banks convert loan into FTCL and so on and so forth. And then after the loan is being restructured, then the company start writing off the investment made into subsidiaries. And as I said that in this case, the total balance sheet size is close to 20,000 crore. And the amount of investment made into subsidiaries is 15,000 crore. So you can imagine that 10,000 crores of loan and another 10,000 crores of liability by way of share capital, FCCB, trade payables, etc. And the major part is 15,000 crores of investment into the 87 subsidiaries. And unfortunately, all the 87 companies failed, which is unlikely. But not 87, precisely 4 and 5 remained. Almost 50 to 60 companies failed, and then the company providing the diminution in the value of investment and the entire amount going away from the balance sheet, and how the funds had been siphoned and diverted. So this is one of the very, very important area to be examined in forensic audit. Going further, as I said, in the balance sheet, there are another few items like inventory, which are the major part of inventory, be it raw material, finished goods. But the major issues in inventory is one is stock, one is work in progress, because there it is found to be commonly inflated. Second is goods in transit. So what is the holding period of inventory? And then inventory, it is very common that the chartered accountant writing as valued and certified by the management. So rather than providing a qualified opinion or a disclaimer of opinion in the main auditor's report, I have found it is to be very common in India, particularly because in abroad such practice is not allowed and it is not happening. But in India, wherever there is an issue with respect to the quantity of the inventory or the valuation of the inventory, chartered accountant, auditor writing in the inventory schedule into bracket as valued and certified by the management, meaning thereby chartered accountant is disclaiming so far as valuation of inventory and the quantity of inventory is concerned. But that is not the issue. Issue is that in forensic audit, what is the holding period of raw material, what is the holding period of WIP, finished goods, stock and trade, stores and spare, which are the stores and spare, whether it is an imported or indigenous, whether if it is indigenous, whether such stores and spares are readily available, packing material, etc., etc. Then also moving to the liability side, we have various provisions about contingent liability because provision and contingent is another area. Then Chetanji, moving to the balance profit and loss statement, we also look into the revenue from operation, which are the main products which the company has sold, what is the object of the company, for what purpose the facility has been set up, whether the facility has been set up for the purpose of, let us say, manufacturing of a pharmaceutical item. But if the company is doing trading in steel or trading in cloth, normally we all forensic auditor will always look it with suspicion and will investigate further that from whom such purchases are made and what are the rate and what are the sales, from what is the profit earned on such purchases and sales, which is overall profit, so as to find out is it an attempt to inflate the turnover or an attempt to inflate the profit or an attempt to inflate the top line as well as bottom line, etc. So
Yes,
these are the few points I had given. Each and every point needs to be examined in great details.
yes, sir. As you correctly said that this type of investments we have to watch and we have to analyze from as a forensic auditor point of view. Apart from this, when coming to the profit and loss statement, like inflating the revenue and inflating the turnover, this generally happens when the company is having a major exposure to the bank where they have to give the consistent results, pay the consistent EMIs and on the term loans, as well as have to um, make the stock as well as the debtors count for calculating this capital working limit.
Yeah.
So this needs to be
So
watched by the
mainly if
forensic.
it is a loan from bank or if it is a listed company, also in order to maintain the EPS, in order to maintain the EPS, profit is inflated or the by profit is inflating by showing the by inflating the closing stock and so as to by showing the huge WIP and then auditor writing as valued and certified by the management.
Yes. Sir, so coming to the other question, how the members can effectively utilize the auditor's report. We have studied about this balance sheet and the P&L. Now we want to study how the members can effectively utilize this auditor's report and various disclosures made by the statutory auditor in the CARO report for the purpose of conducting the forensic audit. Like how we can find out
Yeah,
points.
very good point, Chetanji, because as I said in the beginning, that after the new Companies Act 2013, wherein the section 448, which deals with punishment for the false statement, and the false statement meaning thereby, if any information as disclosed in the audited financial statement is found to be incorrect, there is a liability on the management as well as on auditor under section 447 and 448 of the Companies Act. This is one point. Second point, recently, friends, you must have read in the various newspapers and articles about the NEFRA, wherein the various accounting fraud, particularly I'm talking, various accounting frauds, be it case of Cox and King, ILFS, CCD, Coffee Day, Satyam's case, etc., wherein it has been found that the financial statement as certified by the statutory auditor were not true and fair. So therefore, the various regulators and stakeholders rely upon the financial statement, one which are audited. Audited meaning thereby, it gives a comfort to the stakeholders that the balance sheet, statement of affairs, statement of cash flow, profit and loss statement, etc., indicates true and fair view. But if actually there is no true and fair view, so therefore it will result into the falsification of the financial statement and therefore indicating the incorrect position, leading into incorrect decision by the stakeholders, those who relied upon such audited financial statement. So the first point, when any forensic auditor will look is that they will examine in details about the financial statement, about the books of accounts, trail of audit, cash flow statement, various standard operating procedures, compliance to various legal requirements, be it section 185, 186, if a company has taken a deposit, compliance to RBI acceptance of deposit rules and regulation, etc., etc. And if the same is not properly dealt in the books of accounts, and moment there is a violation to accounting standards or gaps, generally accepted accounting principles, the auditing standards issued by our institute is very clear that if the accounting standard as applicable to the company has not been complied, or the generally accepted accounting principles, there are various generally accepted accounting principles every company needs to follow. And if there is a violation to any of the generally accepted accounting principles, then naturally the auditors need to qualify his opinion or the modified opinion. So after having examined a issue and reaching to a conclusion of, let's say, some diversion or siphoning of the funds, the issue will also be examined from the point of view of the misstatement of information. And then further, every forensic auditor will examine the statutory audit report. So if the statutory audit report is clean and still there is found to be overvaluation of the inventory, in revenue is inflated, proper amount of depreciation is not provided, proper provision is not made, and there is always difference between provision and contingent, as 29, because there is a thin line difference between what is provision and what is contingent. So if the proper amount is not provided, provision is considered at contingent or contingent is considered at provision, and then still auditors not qualifying opinion will result into the falsification of the books of accounts and so as to the audit reports and so as to the responsibility of the auditor. So the auditor responsibility or the auditor's report importance is from two points of view: whether a issue has been properly dealt in the auditor's report, number one, and number two, having properly dealt, whether the amount and qualified opinion has been shown as qualified and not as disclaimer, and disclaimer has not been shown as qualified, and emphasis of matters I will cover in short. As we know that there are three types of auditor's report. One is clean, another is modified opinion, and third is disclaimer of opinion. Large number of cases it has been found that modified issue one which should have been shown as modified has been shown as disclaimer, and issue one which should have been shown as disclaimer has been shown as modified. So if the issue is not properly dealt, number one, and number two, auditing standards requires that the member, the chartered accountant who is doing the audit is also required to quantify. Let's say the issue is with respect to not providing depreciation. So he will have to state that how much is the amount of depreciation which is overstated or understated, and as a result, how much is the profit overstated and understated, and what is the consequential effect of the same on the net block of the fixed assets as shown in the balance sheet. So we have seen in few cases auditors writing that management is of the opinion that this issue has not been crystallized and management has considered it as a contingent liability, and then auditor writing we are unable to comment on the decision made by the management. So that is all not permitted as per auditing standards. So auditor has to be very clear in terms of drafting the qualified opinion and modified opinion. Then going further, if there is no violation to accounting standards or auditing standards as well as gaps, but issue is something very important which auditor wants to bring to the knowledge of the stakeholders, he will be putting it under the emphasis of matters. So the auditor's report is very, very important. Number one, to read, to find out if a particular issue as noticed during the course of forensic audit, how the same has been dealt by the auditor. Number one. Number two, having dealt whether the same has been properly and appropriately described under the relevant head as emphasis of matters or a qualified opinion or a disclaimer of opinion. And third, coming to the CARO report, as you know that the CARO report is only applicable in India. There is no concepts outside India wherein the auditors is providing a separate information on the various paragraphs of the companies. Though friends, auditors report is an opinion, the various disclosure made in the CARO report are the statement of fact. Because if you read the paragraph 4 and paragraph 5 of the relevant sections of the CARO, as described under section 143(12) of the Companies Act, it says that the auditors need to provide information. So in the CARO report, there are 21 clauses are there presently, and each clause some of the 21 clauses has inter alia disclosure requirement with respect to 5 issues, 6 issues, so and so. So roughly there are 50 points, 50 points on which a company auditors needs to provide his comment, like maintenance of fixed asset register, then valuation, then physical verification of all the fixed assets during the year, whether all the fixed assets are in the name of the company, whether now recently added any Benami Transaction Prohibition Act is proceedings are initiated against the Benami Transaction Prohibition Act against any of the property. So there are 21 clauses, but some of the clause like first clause with respect to fixed assets, second clause with respect to inventory, third clause with respect to transaction with related party in the nature of loans or advance in the nature of loan. Because the recent amendment of 2020 in the CARO includes loans and also added advance which are in the nature of loan. So to which related party it has been given, whether the terms and conditions are prejudicial to the interest of the company, etc., etc. Then maintenance of cost record, and if a company has come out with deposits, company has come out with IPO, whether the funds had been used by the company for which company has come out with IPO or FPO as the case may be. So in forensic audit, depending upon what is the issue which has been identified or what is the issue which is being investigated by the forensic auditor, if there is a relevant disclosure in the CARO, that is also simultaneously examined and looked into, and some of the valuable informations are provided in the CARO, like default in making dispute of undisputed tax liability. So moment there is a default in making payment of undisputed tax liability, meaning thereby the company is having liquidity crunch and still company is investing into subsidiary and huge amount of investment made into plant and machinery. If all those three issues are linked, then probably there will be good result in the forensic audit. So as I said that the CARO report is there only for the purpose of disclosing certain additional fact. Of course, certain small companies are being exempted from the compliance of CARO because there's an additional burden on the statutory auditor to report on the various issues. So yes, to conclude, auditor's report and CARO are one of the important tool, one of the important report. I will use the word tool, one of the important tool for the purpose of forensic audit.
Yes, sir. As you correctly mentioned about the CARO aspect, about the audit report aspect, that we as a forensic auditor have to think while doing the forensic audit. I would just add one thing or to sum up that also we need to think from the perspective of a businessman. Like, what as a businessman, if I would have been at that place, what I have done. I mean, if there is one side there is undisputed tax liability, and other side you are investing into the subsidiary. So, anyways, there should be a red flag in the mind of a forensic auditor that he needs to look into that aspect minutely.
Yeah, meaning thereby, if there is a already liquidity crunch and then making investment into subsidiary, and then the subsidiary amount turning into diminution in the value of investment. If I'm having a liquidity crunch and the company is investing into subsidiary and subsidiary is going to give me the good revenue, it's okay. But if the subsidiary is again in the tax-free heaven, then the object is something different than the main object, and then after 2 to 3 years, subsidiary started incurring losses, and then the whole amount of investment is gone away. So this needs to be examined from the various perspectives and the different parameters here.
Yes. Yes, sir. I was just going to ask you about some real life examples, but you have already covered in all the
Yeah, I
questions.
already covered
So,
good real. There are large number of real life examples. If we start looking into the various financial statement, particularly the best part will be to the members. My advice is that you have in the media the name of the various companies, the account which has turned into NPA, be in the recent past or in the earlier past, wherein the RBI has identified a list of 12 companies which were the major default made, and as a result of which IBC came into existence or whatever. So you start reading the financial statement of these companies, not for 1 year, but for at least couple of years, 3, 4, 5 years. Then you will find why the account of the turn has turned into NPA and what are the relevant issues which is visible on the face of statement of financial statement. So that could be the good case analysis for the members to read it.
right. Sir, going to the question answer session, I have one question. So, in case of siphoning of 10,000 crore by investment in subsidiaries in 87 countries, as you told about that example,
Right.
what was your observation about omission, commission, failure of statutory auditor of the holding company, and detection of this diversion of funds? Like, what was the
So
observation
it
from the
was
statutory
not the failure of the audit, because when the subsidiary was set up, there was a proper board resolution. It was within the limit of section 185 and 186 of the Companies Act. The issue was deliberated in the audit committee. And as you know that the role of the statutory auditor is to true and fair. So when the investment was made, of course, it was shown at the amount at which investment has been made. But probably the statutory auditor will go beyond the the forensic auditor will go beyond the statutory auditor. He will start with a doubt and he will examine each and every transaction. So in the forensic audit, naturally, we will not be going by the approval and so and so. One will be looking into the proprietary of the transaction, what was the source of the fund, what was the need of the investment, in which country, what was the business model, what business has been done by the company. So I will put it, there was no lapse on the part of statutory audit, but yes, there was lapse in the corporate governance. The intention was not very much clear to have a value addition by setting up subsidiaries, and then some of the subsidiaries were merged and some of the subsidiaries were demerged, and some of the subsidiaries, one business is merged to another company and some is demerged, so on and so forth. Because in such cases where the amount involved is sufficiently large, I have found that it is not that simple, because the transaction will be very, very complex, and there is a court approval, etc., etc. So the forensic auditor does not go with the court approval, because the court approval is just a procedure. Court will never look into the accounting entry. Court will not look into the what is the cut-off date, what is the appointed period, what is the uh, transaction, what is the valuation, what is the in effect transfer of the business or demerger or goodwill or whatever it may be. So, but the forensic auditor will examine from all the angles, and in this particularly case, the management was held responsible for ciphering of the funds.
Yes, sir. That was the only question that was asked from the participants. So, sir, with this we end. I would just like to give a word of thanks. Sir, as we come to an end of this insightful session on the importance of audited financial statements in forensic audits, I would like to express my gratitude to all of you for your active participation and engagement. First and foremost, a special word of thanks goes to our esteemed speaker, Gyan Pipara Sarji. We are immensely grateful for his expertise and shedding lights on the crucial role of audited financial statements in forensic audits. His in-depth knowledge and practical insights have provided us with a deeper understanding of this subject. I would also like to extend my appreciation to the organizing committee and everyone involved in making this session a success. We have more than 600 registrations received, and we had more than 600 participants who were attending from all over India. Thank you once again to our speaker, organizing committee, participants, and the organization institution, our ICI, for your valuable contributions. Let us continue to explore and deepen our insights, understanding of forensic audits, and the reliance on the audited financial statements. Thank you very much.
Thank you. Thank you. Thank you, everyone. Thank you, Jatanji. Thank you, everyone.
Thank you.